All right. So we are back for another show. So first, let me just talk about some general stock market and general market things. Then we'll get into tonight's show topic. So jobless claims were a record 3.3 million. However, they are nowhere near the real numbers, in my opinion. Getting a lot of emails, Facebook posts from Wall Street for Main Street podcast listeners and friends who lost their job and tried filing in their state here in different states in the United States for their jobless benefits, unemployment claims, and the websites for each state were not working. So this is going to take weeks, at least a couple weeks, maybe a month or more, for the real numbers, the real jobless claims to be felt by the global pandemic and the shutdown that has happened here in the U.S. Okay, so first off that, in spite of that, the Federal Reserve actually managed to get the stock rally positive green 3 days in a row. So good job, Fed. They won a battle here. God knows how much money they had to actually print. The Fed's official balance sheet came out today, and it was unbelievably brutal. So last week, the Fed's balance sheet went up $300 billion, went up to $4.6 trillion, which was above 2008-2009 crisis levels. In the next week, this past week, it went up $600 billion. So the last 2 weeks, the Fed's official balance sheet is now up $900 billion. The Fed's official balance sheet is now $5.2 trillion. Pretty crazy. And I don't think they're anywhere near done. It's going to get insane. The question for me then is, how long until $10 trillion on the official balance sheet? Might only be 12 months, might be less. That's how crazy things are going. So, tonight's topic, now that we've done the roundup with the Fed's official balance sheet, my thoughts on the jobless claims, and the Fed managing to get a stock market rally for 3 days in a row. Also, ridiculous people like Fox News running on the bottom part of their news thing for the entire afternoon, their bottom ticker there, that the bear market in stocks is over after a 3-day rally. Just ridiculous. Just absolutely ridiculous. I would love to get Dr. Mark Faber's opinion on that. The bear market is over, according to Fox News, after a 3-day rally in stocks, despite how the stock market was down from, 29,000 to, below 20,000 on the Dow. Just ridiculous. But tonight's show, over the last couple weeks, there has been an insane amount of stories about the oil market and a lot of crazy things going on in the oil market. So you can see a couple of them on your screen there. I spliced a couple together. You have this new story that came out today from the Financial Post. The world's on the brink of running out of places to put oil. So you have on Macro Voices, you had Eric Townsend, who is a professional money manager, and he trades a lot of oil futures contracts. You have professional oil trader Tracy Schuchart, who is Shy Girl on Twitter, talking about getting an oil tanker, joking about it, to store oil. But the fact is, all these investment banks, all these hedge funds have been doing it. The amount of oil storage is quickly declining. I think also the Strategic Petroleum Reserve announced today, I saw this on Shy Girl's Twitter, that they're not going to be buying oil. So they canceled that too. On top of this, in the last day or two, you now have Trump doing a reversal and sending his Secretary of State, Mike Pompeo, to go to Saudi Arabia and try to get them to help lift the price of oil. But here's the problem. Okay, so no one's talked about this except for Kyle Bass, because Kyle Bass, while he's not a Trump supporter, did not vote for Trump. He has worked with them for trade negotiations to help trade deal negotiations with China. So Kyle Bass has extensive political contacts on both sides of the aisle, and he disclosed, Kyle Bass, in a recent interview, hedge fund manager Kyle Bass, that the Trump administration basically, before the inauguration and for years now, President Trump was sending his son-in-law, Ivanka's husband, Jared Kushner, all over the Middle East to urge Saudi Arabia and other OPEC oil-producing countries to produce as much oil as possible to knock the oil price down so it benefited Americans and benefited the U.S. economy. So you have the Trump policy doing that, but now here you have a hard 180-degree reversal, but now the spin is that they need to get the Saudis to help move the price up. They're putting even more pressure on the Saudis, but the Trump administration for years sent Kushner all around, according to Kyle Bass, and he would know, considering I've spoken to him about some of these things, but the context he has in the Trump administration, especially with the Treasury Department and the trade deal negotiations, that Trump was putting an extra emphasis on lower oil prices and increasing oil production. So now things are reversing. On top of this, you have tens of thousands, and this is so sad, people who have already, according to these articles I've been seeing, there's a new article out from Bloomberg from a couple days ago, David Wethe, W-E-T-H-E, tens of thousands are getting laid off in U.S. shale patch. One of the most painful busts in the history of crude oil happened just 6 years ago when a sharp price drop cost 200,000 roughnecks, almost half the entire workforce, their jobs. And now the spread of the global pandemic, coupled with an oil price war between Russia and Saudi Arabia, or they're working with different ways to kill shale, which is higher cost and more debt, threatens to devastate the oil service industry and its workers once again. Tens of thousands of Texans are being laid off across the state in places like the Permian Basin shale fields in West Texas as companies shut down drill rigs, according to Ryan Siddon, a state oil regulator. Announcements are trickling in. Drilling service company Canary cut 43 workers last week. Oilfield pipe maker Tenaris firing 223 from its Houston area facility. If you want to read more about the article, I will post a link. If you are a real estate investor, a rental property owner, if you're looking for cash flow, there is crisis and opportunity. At some point towards when this global pandemic ends, there may be opportunities in Texas and Oklahoma for single-family starter homes for cash flow rental properties. So, yeah, there's going to be a big oil bust, but if you're a real estate investor, a rental property owner, maybe you should speak to my friend Jason Hartman, who sells turnkey rental properties. He's not paying me anything for this. I'm not endorsing him, I'm not getting a paid advertisement or anything like that. He just sells prepackaged rental properties. He also sells real estate financial education. So if you want to learn how to be a rental property owner, how to do all the things that you need to do successfully yourself, he has those education seminars and books and video tutorials classes. Also has a free podcast too, Jason Hartman. So there will be opportunities for rental property owners after this oil bust to go in there to Texas, Oklahoma, North Dakota. But yeah, there's going to be a lot more blood. Also, there was another estimate that up to 20%, let me hear. This article is from Svitana Paraskova. She writes a lot of good articles on oilprice.com, which is the best free website for oil market, natural gas market research, that the global pandemic could bankrupt 20% of European oil field service companies. So more than 200 small and medium-sized oil field service operators in Europe, or 20% of all European oil field service firms, could go bust as the global pandemic will hit the market hard and wipe out $5 billion worth of orders. Rystad Energy said in a new impact analysis. Most of the hardest hit firms will be in the United Kingdom and Norway, Western Europe's largest oil and gas producers, according to the energy research company. So most of the $5 billion decline in orders this year, or as much as $4.5 billion, will be in Norway and Britain, while maintenance, drilling rigs, and well services will be the hardest hit segments. If you want to read more of that article, it'll be in the information and description section after the show's over. Nick Cunningham, another oil journalist I respect a lot, who writes a lot of good articles for oilprice.com, wrote an article last week saying that the month of April could be the worst month ever for oil in its history. And there are a lot of people, a lot of articles coming out on oilprice.com, a lot of investment bank energy analysts that are setting lower and lower price targets. Now, we'll see if that ends up being the case. But there are estimates out there, I could tell you, I've seen some of them, estimates out there that demand for oil has collapsed by 20 million barrels per day. This Financial Post article about the world's on the brink of running out of places to put oil says that supply is exceeding demand by 12.4 million barrels a day. Producers will be forced to cut output by June. So the world will run out of places. This article is by Alex Longley, came out today, March 26th. World will run out of places to store oil in as little as 3 months, according to an industry consultant. IHS Markit, that's a pretty well-known research firm, said that the current rates of supply and demand mean inventories will increase by 1.8 billion barrels over the first half of 2020, with only an estimated 1.6 billion barrels of storage capacity still available. Producers will be forced to cut output because by June there will be no place left to put the unwanted crude oil, it said. And this is why you have refiners like Valero and others, you have them scrambling to sell their produced oil and gasoline and other products at a discount and cut their production levels. So they're trying to clear inventory for cash. They're trying to cut production levels. Also, I just saw some stories out. Valero was making ethanol and some other biofuels. The biofuels companies, all the alternative energy, all the renewables are getting absolutely killed by oil prices at these levels. So you have Brent crude right now barely above 23 at $23.09 a barrel. You have WTI at $23.09 a barrel, and Brent crude is at below 29 at $28.94. Also, the head of the International Energy Agency just warned that global demand could plunge by 20 million barrels per day. Headline on oilprice.com right now. And this is why you have the Texas Railroad Commission, which was actually, they were OPEC before OPEC. So they have a history of being a cartel. You have the Texas regulator considering oil output cuts for the first time in decades. This Bloomberg article came out a couple days ago. Rachel Adams Heard, by Rachel Adams Heard, Kevin Crowley, and Javier Blas. If you want to read it in the information in the description section, I'll talk about it a little bit. Apparently also Tracy Schuchart, who is also Shy Girl on Twitter. She's a professional oil trader, like I said earlier, done a lot of interviews. I was supposed to have her on for an interview last week or the week before, and she's rescheduled multiple times. I will keep trying to get her on, but it's tough. She travels a lot. She has a lot of interview requests. Anyways, she posted a story how a U.S. federal government regulatory agency said that the Texas Railroad Commission was approved to discuss these things with OPEC about restricting oil production for Texas oil producers. So Texas's main oil regulator is weighing for the first time in nearly half a century whether the state should curb crude production, a move that would have an enormous economic and political impact. The idea is still in preliminary discussions among the staff at the Texas Railroad Commission, which despite its name regulates the oil industry, comes after prices plunged to levels last seen 18 years ago. It shows that a policy once considered unthinkable is now being mulled as company/spending. As a first step, the staff is reviewing how implementing the reduction of output via what's known as pro-rationing would look like in practice. According to people who have discussed the issue, on first review, the staff believes it's legally possible to mandate pro-rationing, one of the people said. So it sounds like the Texas Railroad Commission, like I said, was a cartel setting oil production before OPEC. And OPEC is the Organized Petroleum Exporting Countries, but it's a cartel, if you're not familiar. So we may have another oil cartel or a resurgence of an old oil cartel trying to regulate supply. As a first step, legally possible mandate per rationing. Ryan Sidden, one of the three commissioners at the regulator, wrote in a Bloomberg opinion piece Friday that the federal government could coordinate output cuts with Saudi Arabia and Russia to calm the market. Wow, that is crazy. Such an approach could stabilize prices in the mid-30s, Sidden wrote, which would stave off a total oil industry meltdown. In theory, Texas could cut production by 10%, and if Saudi Arabia is willing to cut production by 10% from its pre-global pandemic levels, Russia is willing to do the same. It would return the market to pre-crisis levels and only somewhat oversupplied. That's the claim. With other governments manipulating oil markets, it's fair to ask, why shouldn't our government step in? Okay, I guess desperate times call for desperate measures, right? Unbelievable. Truly unbelievable, all the crazy stuff that's being planned. Oh, and I wanted to bring this up also. So we are going to get more information from the large oil companies in April and May when they announce the Q1 2020 earnings. We're going to see how bad things were. And I suspect things are going to be very, very bad. I've been warning people about yield traps for the oil companies. The dividend payout ratios are too high, just like these real estate investment trusts. They tease really nice dividend yields, but there's always the possibility of a dividend cut very soon after you buy the stock. Oh yeah, smash the like button. I have over 300 people watching this and only 50 likes. Please smash the like button if you like the content. So let's just do a quick recap here. You have tens of thousands of oil workers getting laid off in the Permian Basin. That's been reported by the Dallas Morning News and Bloomberg just this week. You have the Texas Railroad Commission discussing restarting the old cartel to join with OPEC. You have a warning about how many oil service companies could go bankrupt in the near future, especially European ones, from what it sounds like. The European oil service companies seem to be in the worst shape. Then the American ones are also in bad shape, but it sounds like the European ones are in even worse shape relative to the American ones. And then you have too much oil stored already. So a bunch of hedge funds, a bunch of investment bankers already bought oil tankers, betting the oil market would rally, and now their bets are bad. Well, they may still ride it out. Some of these guys could probably afford storage fees, but we're running out of oil storage. I'll continue with the rest of that storage article here. Okay, according to this article, supply may exceed demand by 12.4 million barrels a day in the second quarter, with other traders, banks, and consultants also forecasting bumper surpluses, IHS said. Vitol said on Wednesday that demand has fallen as much as 20 million barrels a day from last year. Wow, that's crazy. A 20 million barrel per day drop in oil demand. No one saw that coming. Quote, well, no one saw that coming in a long time ago. I mean, I saw that coming a couple months ago. Because I saw what was really happening. I heard and saw the videos of what was really happening with the global pandemic out of China, out of Wuhan, out of China, how it was spreading to Asia, how things were getting bad in Italy. And the stock markets, the oil markets, did not price this in right away. The airline stocks did not price this in right away. So I saw this about 2 months ago. Now, I didn't see this come. I saw an oil market bust 6 to 8 months ago. I was warning people there was too much oil production in shale. The Chinese economy was slowing down. But I did not see a 20 million barrels per day drop 6 to 8 months ago. That is unbelievable. 20 million barrels per day demand drop. Quote, production is going to have to be reduced or even shut in, said Jim Burkhardt, head of oil markets at IHS. Quote, it is now a matter of where and by how much. U.S. concerns. There are already signs in prices about a potential scarcity of storage space. In the U.S., the so-called WTI cash roll traded down at the lowest level since December 2008 on expectations that inventories at the delivery point for U.S. futures would balloon in coming weeks and months. Brent futures are trading deep in a contango structure where spot prices are discount to those in later months as the market tries to create the necessary financial incentives to store by pressuring near-term prices. Measures of the physical market for actual barrels of crude are also pointing to weakness globally. Of the world's 3 largest oil producers, Russia has the least amount of available storage capacity at about 8 days, IHS said. Those figures are based on the amount of production that could be stored if exports dried up. Saudi Arabia has 18 days and the US has 30. Nigeria, the biggest producer in Africa, is the most vulnerable among the areas measured by IHS. Estimated first quarter 2020 daily production of 1.9 million barrels a day would fill up available local storage in 1.5 to 2 days. Wow. The firm said consultant Energy Aspects also sees storage tanks filling in the coming months. Quote, with OPEC pushing output to record highs, inventories will quickly get out of hand, the firm said in a note. We'll run out of crude storage capacity by the early third quarter of 2020 with product containment arriving earlier. And then also the Strategic Petroleum Reserve. Trump was thinking of buying additional oil for the Strategic Petroleum Reserve, and he might have bought some, but they just announced, I think, today that that's ending. So all of these stories, not good news for oil. Okay, I will take a look at Super Chats now. Kzev, thank you for the $10 Super Chat. What's my opinion of PBFX? I have not looked at it. I'm sorry. Let me see here. PBFX. Well, the dividend yield is 42%. Oh my God, that is crazy. The dividend payout rate, the payout ratio is 119%. The dividend payout ratio is 119.8%. I would say, KZEV, that you're looking at a yield trap. So it might be a good company, but I personally, I'm not going to catch a falling knife. I'm waiting for dividend cuts. Dividend slashes, dividend cuts, dividend suspensions. I think for the first time in a long time, we're going to see a lot of the larger super majors, maybe ExxonMobil. By the way, ExxonMobil is on credit ratings watch list for S&P Credit Ratings Agency. They already had one credit ratings downgrade. It's looking like a second one. They're the only oil super major on the credit ratings downgrade list, watch list. So ExxonMobil is looking like a second credit ratings downgrade is coming in the next couple weeks. We'll see how earnings are for ExxonMobil. We'll see how bad earnings are for ExxonMobil. Okay, JB Weld, another super chat from him. Thank you very much. The silver lining for governments is cheap oil makes cheap asphalt. Let the infrastructure capital investments begin. Japan did way too many infrastructure stuff, and so has China. The U.S. needs to do infrastructure, so we'll see if the U.S. does that. But I mean, how many more infrastructure projects are needed in Japan or China? There's already like bridges to nowhere and a lot of wasteful infrastructure projects in China. All those ghost cities, empty concrete shells that are considered investment properties, although the real estate market's starting to collapse. I'll save that for another show. And it looks like your storage trade that you wanted me to ask Eric Townsend about, that's not looking like a smart idea at the moment. If there's not even storage capacity there, not sounding like that good a deal. Okay, one more super chat from Sean. Sean, are you a Patreon account contributor? You send me a lot of super chats. You get more value behind the paywall on Patreon. I just put out another article today for my patrons, another article about bailouts and credit ratings downgrades. And then also, I am working on a silver miners article. It's not done yet. Started on it last night. Didn't get to work on it today. Maybe I'll get it done the next couple days. So I am working on additional stuff. They're for only $5 a month for a mediocre to crappy cup of coffee extra per month. $5. You can take a look behind the paywall. Lots of audio podcasts, written articles, a lot of good research there, including technical analysis charts and stuff that I found inside the filings for these publicly traded companies that even some hedge fund managers did not even know about. I know because I asked them on Twitter that I follow them, and they were not aware of a lot of the things I brought up to them. Okay, so let's get to your super chat question here. Did I see the article where the head of the Fed says he has unlimited ammo? Yeah, I saw the headlines, but this doesn't surprise me. So this is the Fed trying to jawbone the stock market back up, trying to get the asset prices back up. It's important for the Fed that the asset prices go back up. So no, I'm not surprised he said he has unlimited or near unlimited ammo. What's his name? James Bullard, one of the vice presidents at the St. Louis Fed, he said something very similar in the last week to 10 days. And Steve Mnuchin, remember Steve Mnuchin says something similar too. Steve Mnuchin did the interview on CNBC. I talked about it a week or so ago. So Steve Mnuchin is saying it, James Bullard is saying it, Jerome Powell is saying it, that they have near unlimited ammo. The one thing the Fed's willing to do almost anything. The one thing they're not willing to do right now is devalue against gold. We may see, if nothing else works, we may see that. We may see a Plaza Accord type deal, or we may see a devaluation directly like FDR did in 1934 against gold. I don't think we're ready yet, but we may see it eventually. My educated guess is they're going to try everything else first. They're going to throw the kitchen soup at it. And I mean the kitchen sink. I was just joking. Everything but the kitchen soup. They're going to throw it at. Okay. JB Weld says, thoughts on Trump establishing a sovereign wealth fund? How would Trump establish a sovereign wealth fund? We're not running a trade surplus. Are they just going to print the money and put it into a sovereign wealth fund? How would we run a sovereign wealth fund? Sovereign wealth funds are designed for when countries manipulate their currency, like China, with a dollar peg to make sure their citizens don't get purchasing power, and then China funnels all those profits that the citizens should have benefited from with purchasing power gains into the sovereign wealth fund. How do you have a sovereign wealth fund unless you're running trade surpluses and have something profitable? Norway has a sovereign wealth fund from profitable oil and gas production. Saudi Arabia has a sovereign wealth fund from, in the past decades, from profitable oil and gas production. China has a sovereign wealth fund from profitable manufacturing. I don't really see how the U.S. could have a sovereign wealth fund. I mean, I guess they could just print up the money and make one, but then that would devalue the dollar more. You already have universities that have created endowments similar to that, and then that's theft. With what the universities have done with perpetual tuition and textbook hikes. Do I like Royal Dutch Shell or waiting for a downgrade on that stock? I think Royal Dutch Shell may even cut the dividend too. It's pretty brutal. I know they haven't cut the dividend, but I would not be surprised if they do. All these it depends how low oil prices go and how long they stay there. If oil prices stay low for another 6 months, 8 months, a year, it would be prudent by these management teams to cut dividends and raise cash. Freeport-McMoRan did a very good job, Freeport-McMoRan management. So even though they made some mistakes in the past, and the mistakes are highlighted in a Patreon account article, that's why I skipped over that part with my words, because there's an actual article behind the paywall, so I don't want to tip people to that for free. I spent a lot of time finding that information. But Freeport-McMoRan made mistakes in the past, and now they're making a lot better job, I would say. They cut their dividend or suspended it, and they're raising cash, so they're focused on riding out the storm with cash and cutting costs. They're cutting costs like crazy now. JB says the sovereign wealth fund would be with the stakes the Fed is taking in companies in the bailout. That's interesting because in past bailouts with AIG and Government Motors, General Motors, normally they waited until the stocks went up and then they just dumped all the shares. So I don't know if they're going to do that this time. It's tough to say. Wally, thank you for the super chat. Have you heard anything on a new digital dollar? Yes. Nancy Pelosi and others, they're pushing it. Whoever's paying Nancy Pelosi, should I say, because I don't think she's very tech savvy. Whoever's paying her to do so is pushing it, is having her push it and sneak it into the congressional bailout and stimulus bill. I was actually saving that. I'll talk about that on a short video. I have the screenshots and I'll talk about that on another show. I don't want to mix topics too much. So yes, it looks like the economic and political elites. China was already planning on a crypto yuan. Europe was talking about a crypto euro. Japan was talking about a crypto yen, and the U.S. was discussing the possibility of a Fed coin. But it looks like things might accelerate. So this is like the old Rahm Emanuel quote, like "Don't let a good crisis go to waste." Okay, let me check super chats here. Someone asked, I can't find the question, but someone, I saw it in here, asked about the recovery for oil, how violent and how long it could take. We're looking at least 8 months or a year. We need a lot of production cut, and we need China to come back online more. There's rumors of more a new wave of infections, like smaller amounts of them all over China. There's a lot of stuff all over social media. Also, my financial industry contacts are hearing from their factory contacts that there is additional breakouts in China with the global pandemic. They're smaller, though. So China's going back. The factory owners, the factory workers were ordered back to work, and there are more breakouts. So until things are oil demand is back to somewhat normal, the oil market's in peril. There's going to be a lot more bad news. But I do think in a couple years, maybe 2 or 3 years, it depends, there could be a much higher oil prices. It depends how much supply destruction. The more supply destruction, the more likely that oil prices will be a lot higher a couple years from now. So the more supply that is destroyed, that comes offline, that will not immediately come back online once things return to pre-global pandemic levels, that's going to create the fuel for higher oil prices over the next couple years. It's not going to happen right away, though. It's probably at least 8 to 12 months away before we start to see even somewhat normal demand for oil. Might even be longer than that. Right now, all the news is bad. There's, how many stories do I have open here? Let's see here. U.S. calling on Saudis to halt plan to unleash record oil supply. 10 signs the oil industry is bent out of shape. U.S. oil price collapse equals U.S. economic collapse by Steve St. Angelo. Coronavirus could bankrupt 20% of European oil field services. The video is going to get demonetized anyway. Smash the like button. Is this the beginning of the end for Texas oil? IEA boss warns demand for oil will plunge by 20 million barrels per day. April could be the worst month ever for oil. Pompeo urges Saudi Crown Prince to rise to the occasion, help lift the price of oil after Trump was sending Jared Kushner all over the Middle East for the last couple years to increase oil production and knock the oil price down. This is a hard 180-degree reversal. And the newest story out is the world's on the brink of running out of places to put oil. Also here, tens of thousands are getting laid off in U.S. shale oil patch. Thousands of oil workers are getting laid off in the Permian Basin, so similar story. And the Texas regulator considers oil output cuts for the first time in decades. A lot of crazy stories. Oil is still a falling knife. The people in power realize this. They realize the bankruptcies are going to be pretty bad. The first thing that'll happen, I think, is, like I said, is the dividend cuts. First, maybe they slash the dividend. So maybe we'll see 20%, 30% dividend cuts. The larger companies like Royal Dutch Shell and Chevron and ExxonMobil, if they cut the dividend fully, you're going to have all these pension funds that held these stocks for income. They're going to dump too. And the vicious cycle will just get worse. But I expect Q1 2020 earnings for the larger for all oil and gas companies, I think, to be really, really bad. The refiners were not spared. The refiners have way too much production right now. They're clearing inventory. They're discounting to clear inventory, and they're cutting production like crazy. And the refiners, which were making renewables, some of them are getting killed on that too. It is just all around bad news for oil. Not a good time to buy yet. You want to see some evidence, some good news, some evidence of a turnaround, and it is just not there. Okay, so I think that's it for tonight's show. I want to thank everyone for listening. Thank you very much to my way over 500 Patreon account contributors. I think it's a little over 600 now. It is rolling. It might be 700 in the next couple months. I can even start to think about 1,000 in 2 years or less. That's how great things are rolling right now. I think I've picked out the right price point where people feel that they're getting a lot of value for $5 a month to start with, and maybe in the future I will provide additional value added at a higher price point there behind the paywall. I'll think about what additional information products or stuff like that I could provide. I'll think about it. And then also, as things keep growing, I could start improving and upgrading, get a new laptop, and good things like that. Hopefully, I've been testing out Zoom. I tested Zoom with my best friend a couple days ago. So hopefully I'll figure out how to use Zoom, and maybe I could use Zoom for interviews then. I have to feel comfortable using Zoom before I actually start doing it for interviews, though. So thank you everyone for listening again, and this is one of the only places on YouTube or anywhere else with really good information, research, analysis, and financial education with a free market or Austrian school perspective about a lot of different markets besides just the gold market. And there's going to be a lot of topics about the gold market. Probably do that show in the next couple days. Crazy amount of things about the gold. Well, there is no gold market. So there's the futures price, but you can't get the metal anywhere near the futures price. The elites are working on accelerating the cashless society. There was a derivatives collapse, according to a Bloomberg article, so I'll talk about that. There's a lot of interesting topics. There's so many topics for me to cover all by myself. In just the last couple weeks, I could probably spend 6 months to a year going through all the different topics. That's how many different topics have happened in just the last month. That's how crazy everything has been. Okay, everyone, thank you very much, and that's it for tonight.